Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about MACERICH CO quarterly report. MACERICH is a leading real estate investment trust that owns, operates, and develops high-quality retail properties in densely populated U.S. markets. The company's portfolio consists of 39 retail centers with approximately 42 million square feet of real estate, concentrated in California, the Pacific Northwest, Phoenix/Scottsdale, and the Metro New York to Washington, D.C. corridor. The list of businesses and services provided by MACERICH includes property ownership, property management, development of retail properties, sustainability initiatives, recognized leader in sustainability, corporate governance note. The company's focus is primarily on retail real estate, with a concentration on community cornerstones that serve as gathering places for local residents. Die MACERICH CO hat im Vergangenen, Jahr kein significante Änderung ihres Aktienkurses erlebt. Es ist schwierig, die genauen Grund dafür zu bestimmen, de viel Faktoren den Aktienkurs beeinflussen können und des Fehlen einer signifikanten negativen Veränderung auf ein Vielzahl neutraler Faktoren oder sich gegenseitig aufhebender positiver und negativer Nachrichten zurückzuführen sein kann. Ein möglich Grund für die Stabilität des Aktienkurses der MACERICH CO könnten sein. Positiv und Unternehmensbericht. Wie stabil Quartalsergebnis oder erfolgreich Vermehrungen in Wichtigen, Objektenbestätigung von Bonitätsratings, durch Ratingagenturen, Ankündigungen von Dividenden oder strategischen Initiativen. Wie Modernisierungen oder Nachhaltigkeitsprojekten allgemeine Marktstabilität, insbesondere in Phasen, in denen der Gesamtmarkt oder der Ratesektor stabil ist und spezifisch Daten zu den Aktienbewegungen der MACERICH CO. Im Verhältnis zu allen Nachrichtenerinnern, im Zeitraum November 2024 bis November 2025, ist es nicht möglich, ein Generalist von Ereignissen zu liefern, die nicht zu einer signifikanten negativen Veränderung von über 142% geführt haben. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth is primarily driven by an increase in leasing revenue, with notable increases in 2025 compared to 2024. The sale of properties also contributed to revenue growth, particularly through gains on property sales and the sale of land. Additionally, a joint venture gain from Atlas Park added significantly to revenue. On the other hand, revenue decline is primarily attributed to losses related to property sales, including write-downs of assets. Leasing revenue declined due to decreases from disposition. Properties also contributed to the decline in revenue. Furthermore, management companies' revenue decrease from JV transition centers was another factor contributing to the decline. Overall, these drivers highlight the key factors influencing revenue growth and decline, with leasing revenue and property sales being major contributors to growth, while losses related to property sales and leasing revenue decline driving the decline in revenue. Net income and profit margins. A shift in fortune. The financial performance of a company underwent significant changes between 2024 and 2025. Notably, the company transitioned from a loss of -$419,222 in 2024 to a profit of $34,828 in 2025. This marked improvement was also reflected in the profit margins, which changed from -2.15% in 2024 to 0.23% in 2025. The primary reason for this shift can be attributed to tax benefits. The company experienced a deferred income tax benefit of $710 in 2025 compared to -$545 in 2024. This favorable change contributed significantly to the increase in net income. Additionally, the decrease in net income from 2024 to 2025 was likely due to various operational and financial factors. The 3 months ended September 30, 2025 saw a further improvement in net income, with a profit of $1,720 compared to a loss of -$421 in 2024. The corresponding profit margins for this period were approximately 12.6%, $57,655/$458,426. Overall, the company's financial performance demonstrated a notable turnaround between 2024 and 2025, driven by tax benefits and operational adjustments. The company's financial performance has shown a significant improvement in its ability to generate cash from its core operations. In 2025, the company achieved a notable increase of $42.8 million in positive operating cash flow compared to the previous year. This upward trend indicates that the company is successfully managing its finances and generating sufficient cash to support its growth and operations. The company's debt level has seen significant changes over the past period. Total liabilities increased by 1.8% from $5,724,614 to $5,842,380, while debt level rose by 4.3% from $4,894,525 to $5,076,908. Furthermore, total outstanding loan indebtedness as of September 30, 2025 was $6.6 billion, a substantial increase since the previous period. In contrast, interest expenses have shown mixed results, with some periods experiencing increases and others decreases. However, overall, interest expenses have increased, rising by $15.6 million from 2024 to 2025. Management is optimistic about the company's outlook, citing positive leasing activity and a strong pipeline of new store leases. They expect to generate $99 million in excess revenue from 2025-2028 through prior uses in those same spaces. The company has expanded its portfolio through acquisitions, including Arrowhead Town Center and South Plains Mall, and Crabtree Mall for a total purchase price of $290 million. Management is focused on implementing the Path Forward plan, which includes reducing net debt to adjusted EBITDA leverage ratio over the next 3-4 years. They anticipate meeting their liquidity needs through various sources and are confident in their ability to refinance or restructure debt maturities during the next 12 months. The company's financial performance is also improving, with leasing revenue increasing by 16.6% and FFO increasing from $86 million in 2024 to $93.4 million in 2025. Management is managing interest rate risk through a combination of fixed-rate debt and derivative financial instruments. Overall, management is confident in the company's ability to execute its strategy and achieve its goals. The company has a history of paying dividends to its shareholders. In fact, it declared cash dividends of $0.17 per share for each quarter in both 2024 and the first 3 quarters of 2025. This indicates that the company is committed to returning value to its investors through dividend payments. The total amount paid out in dividends and distributions increased by $22 million from 2024 to 2025, further demonstrating the company's focus on rewarding its shareholders. Concerns about inventory buildup and supply chain disruption. The financial summary highlights potential issues with inventory buildup and supply chain disruptions. An increase in accounts payable and accrued expenses suggests that the company is struggling to manage its supply chain effectively, which may lead to inventory buildup. Furthermore, the acquisition of property worth $225.1 million could be related to inventory storage or management, adding to concerns about supply chain disruption. That concludes the financial summary for MACERICH CO. Feel free to comment below, and I will be happy to answer them when possible.